Hello, my name is Mike Barnhart, and I'm the treasurer for Findlay City Schools. And this is a financial update where we will cover the basics of our budget, as well as our upcoming levy and COVID-19 and its financial impacts upon the district. Budget basics. We are on a fiscal year that starts on July 1st and ends on June 30th. We've just finished fiscal year 2020, and we are going to be beginning fiscal year 2021. We have a general fund budget that is $64 million, and that makes up the bulk of our total budget, which comes in at $95 million. In addition to the general fund, we track and maintain many other funds, and a summary of some of those are included on the screen here, the largest of which is our self-funded insurance, from which we pay our employees' health insurance claims. Health, vision, and dental come out of that fund. And then some of our larger funds are also listed, and all of these have sub-funds within them, such as our clubs and activities. Each different student club and student activity has its own fund that tracks fundraisers and the receipts that come in from those fundraisers and their expenses. So that just gives you a glimpse of some of the other funds that we track, and these have different purposes and different objectives, so they need to fall outside of the general fund. For some comparison and perspective, I put together this graph, and you can see where Findlay City Schools' general fund budget compares to Hancock County's general fund and the city of Findlay's general fund budgets. Another area where we'd like to get some comparison and perspective is in relation to other school districts. And this graph shows our total cost per pupil from fiscal year 19, which is the most recent complete fiscal year where that data is available. And to the far left, you see the state average is $12,472. And so we are well below that at $11,774 per pupil. After the state average is the 20 similar districts. The Department of Education looks at our enrollment, our free and reduced lunch, our different demographics, our median income, and it finds the 20 most similar districts in Ohio and with Findlay so that we're all in the same comparison group. And those districts come in and out of that 20 similar district group from year to year, but when in fiscal year 19, we were just slightly above all those other districts combined. Then we have all of our county schools on here, and in addition to that, I've added Perrysburg because we hear a lot of comparisons between Findlay and Perrysburg. So those other districts are listed from the lowest to the highest cost per pupil. Now, where I want to point out is within that $11,774 is our administration cost per pupil, and that comes out to $1,157. And as you can see on the graph, we are well below all of our other districts, including the state average and the 20 similar districts that we are compared to. So this is just to demonstrate we are not being wasteful with the taxpayer money. We are in line with where other districts are, and especially in the area of administration, we are well below those of area schools and the state average. 5-year forecast. All school districts must submit a 5-year forecast every May and November, and what that does is it shows the current year's anticipated revenue and expenses, and then also projects the following 4 years' revenue and expenses. A forecast is always accompanied by assumptions and notes, and those help to explain the data that goes into some of the numbers, and it helps give you a picture of what is going on in the district at that moment of time when it's being forecast. Forecast is a planning tool. It's continually updated because information and conditions change continually. So as more information becomes available, we can fine-tune those assumptions as time goes on. Findlay's forecast, we show a negative cash balance, which will hit us before June of 2022. And what that did is put us in a precautionary financial status where we were required to submit a plan to the Ohio Department of Education on how we would avoid that deficit. And our initial plan is to pass a levy here in calendar year 2020, But if that cannot be accomplished, we had to provide a list of cuts or changes that would take place so that we avoid that deficit come 2022. The current forecast and many other financial documents are available on our website, and we have a special financial page that those can be found at as well. We do have a levy on the ballot come August 4th. It is a 5.9 mil levy, and it will bring in $5.25 million per year. This is the minimum amount that will be needed to maintain our current programming. So we are not trying to implement anything new. This is just what our forecast is showing that we need to, in order to continue in the near future. The collections would begin in January of 2021. It was a 5-year levy, so those collections would end in 2025. And since it's a 5-year levy, the need will likely remain after those 5 years, and we will come to voters to ask either to have that renewed for another 5 years or to change it into a continuous levy. I want to stress that we have not had any new operating levy money voted upon into the general fund since 2004. Now, we have been on the ballot many times, including a permanent improvement levy in 2006 and our building project in 2009. And then we've had other renewal levies that have taken place. But this is the first new general fund millage since 2004, if approved. July 6th is the deadline for voter registration for this August 4th election. So if you are not registered, please be sure to contact the Board of Elections, and they can see that you get registered in time to place your vote on August 4th. How much will a 5.9 mil levy cost? Well, it will cost an owner of a $100,000 home $206.50 per year. Now, how that math works out is you take your home's market value, and that should match very similar to what the county auditor has as your appraised value. So a fair market value of $100,000, and then that property is assessed at a 35% rate for taxing purposes per the Ohio Constitution. So our $100,000 home is now at an assessed value of $35,000. And then the millage is applied to each $1,000 of the assessed value. So 5.9 mils times 35,000, and then we divide by 1,000 because it's on each $1,000, and that's how we come to the $206.50 in additional taxes if this levy passes. I want to stress the difference between assessed valuation and fair market valuation, because the ballot language only mentions valuation, and that's by law. We can't clarify that. So when going into the ballot booth, you want to be sure that you understand that it's assessed valuation, so it's that lower amount. In our example, the $35,000 that the 5.9 mils gets applied to. It is not your home's market value. Now, to independently confirm that, you can search for Hancock County Auditor Tax Estimator, and that should lead you to a tool where you can punch in your address and also add the 5.9 mil levies, and then it'll automatically calculate what that additional tax will cost you based on where the county auditor has your home valued at the moment. And then I think it also includes additional information on all of the taxes that you pay. But there is a line there that'll show you what that additional 5.9 mil levy would cost. Many have asked why we're asking for a property tax instead of an income tax, and that's a fair question. What happens in property taxes is those are paid by all property owners, and that includes our commercial businesses. They pay on the property that they own, as well as individual homeowners. As opposed to a school district income tax, that's only paid by individual residents. So businesses do not pay a school district income tax. In Findlay's case, our commercial properties pay for about 25% of our property taxes that come in. So this new levy, 25% of that, what would be collected, would be coming from Findlay businesses. Our 5.9 mil levy property tax would bring in the same amount of revenue as a 0.5% school district income tax. So when most households compare the two, what the property tax would cost them compared to the income tax, they're going to find that it's going to be more affordable to have the property tax. And I will stress that landlords and farmers, those are the ones you'll generally hear from preferring income tax because they own more property, so they would prefer to have their income taxed rather than the property. And what happens is that you can see that by which districts have school district income taxes. For instance, in our own county, most of those surrounding districts, they do have a school district income tax in addition to their property taxes. So you will see some cities that have school district income tax, but not many. And it's also important to note that traditionally, in the larger scheme of things, municipalities have been left to collect on income, counties collect on sales taxes, and then the schools are left to tax on property. And simply put, it's something our voters are familiar with as far as schools go, paying a property tax. And so we went for a property tax in addition to instead of an income tax, as well as we think it's more affordable to the vast majority of our residents. Another common question is, where's all the lottery and casino money that is going to the schools? Findlay City Schools, we do get $275,000 per year directly from casino revenue. And when you factor that out, it's amounts to $50 per pupil. On the other hand, the lottery money, that does not come directly to Findlay City Schools. The profits from the lottery go into the state's Fund for Education. So it is true that lottery profits are going towards education. And in fiscal year 19, $1.1 million of the state's $10.6 billion budget, or a little over 10%, was from lottery profit. And based on what we get, it'll vary from school district to school district, but that plays out to about $567 per pupil in Findlay's case. Now, with the lottery money, that supplants funding to school. It doesn't supplement it. So in other words, it substitutes funding to schools. It's not over and above what we are already scheduled to receive. So the more money from lottery sales means the less money the state has to find elsewhere in order to meet its education budget. Doubling lottery sales does not necessarily result in more money coming into the schools. And one way to look at this is, if schools really were gaining more money from more lottery sales, then you would certainly see your local schools promoting and advocating on behalf of the lottery a lot more. The simple truth of the matter is that public schools, we've been used as a marketing plan for lottery and casino proponents. So by all means, nothing wrong with playing the lottery or going to the casino. Just don't be misled to think that those extra tickets you're buying are going to support your local school district. I do want to take this opportunity to give a little recap of our levy that was passed over 10 years ago for our new middle schools and MILLSTREAM. And our voters approved a 4.3 mil levy back in November of 2009, and it allowed us to issue $54 million in bonds that helped to build our new Donnell and Glenwood middle schools, as well as the MILLSTREAM Career Center that's next to our high school. And a benefit to that is we had 3 middle schools that were then condensed to 2, and we had 3 MILLSTREAM locations. MILLSTREAM historically has been spread out across the city, and those were condensed to the one building that's next to our high school. And that translates to less buildings means less cost. The bond levy also allowed us to receive $18.4 million in state money that was available, and that helped offset the overall $72 million project. MILLSTREAM opened in August of 2012, and then the middle schools were soon to follow in January of 2013. That project finished on time and under budget. We were very pleased to get our middle schoolers into those buildings in the middle of the year rather than waiting until the start of the 13-14 school year. We have never had to collect the full 4.3 mils. Currently, we are collecting 4.18 mils of that 4.3. I also want to remind our taxpayers that there were other improvements that related to that bond levy, and that included the north wing at the high school, because that had been the former MILLSTREAM area, and so it helped expand the high school to make more classrooms available to high school programming, since we didn't have to use that space for MILLSTREAM. We were also able to build a MILLSTREAM high school connector between the two buildings, and we were able to make improvements to the parking lot. Also, reminder that part of that project, we purchased the land that surrounds Glenwood because we needed more space for that footprint, but also it gave us larger fields. And then you may recall that was a property owned by Trinity Diffco, and we were able, in buying that, we accessed money and support in doing an environmental cleanup of that property. And then the other spin-off of that bond levy was the Marathon Center for the Performing Arts, because we were able to use the project's money to do the demo and abatement for the portion of Central Middle School that was not needed for the Performing Arts project. So our auditorium is still there and has been renovated, but it helped make that property available so that it is now the Marathon Center for the Performing Arts. Now I want to speak a little bit about COVID. I'm going to refer to that to the good, the bad, and the ugly, financially speaking. And what we have is the good, that's less spending that we've seen, and as well as some replacement or advanced revenue that we expect to see. The bad is the obvious, the additional costs from the pandemic, and as also the state funding cuts that we have experienced. And then the ugly is pretty much the unknown, what's yet to be determined, as we are guessing and planning on how to operate our schools moving forward. To specify some of the good, we've had less spending. The biggest one is $1.5 million less in health insurance costs, and with few exceptions, no one was going to the doctor or the dentist during the shutdown, so we saw those reduce cost, and that's a big benefit to us being self-funded. So when we have less insurance being used, that means less that the district spends. We do expect to have some sort of catch-up for postponed procedures, but it remains to be seen to what degree that'll happen. Also, we have reduced utility costs, almost $300,000. Now, some of those savings were anticipated because of more efficient equipment and other changes taking place, but a good part of that is because of the COVID shutdown and reduced usage. And electricity, we expect to see over $250,000 less compared to fiscal year 19. Natural gas will be down by $31,000. And then our water and sewer bill is down almost 10% at $9,000. We also didn't have to have any substitutes starting in the middle of March, so we have $200,000 less spent than we normally would have. Obviously, we weren't operating buses during that time, so we had less fuel being used. And then also related to that, we had savings from not having spring field trips or spring athletic trips taking place. On the revenue side, we are going to be getting $983,000 in federal funding. A portion of that will be designated for St. Michael's School. That still remains to be seen to what extent that'll be, but that is a significant portion that'll help replace some of what was cut earlier out of our state funding. We also saw an advance in our workers' comp rebate. This isn't new money, it just came to us sooner than it normally would. The bad, we did see a huge last-minute immediate cut of $1,083,000 in our state funding. Again, to give that a little perspective, we run 2 payrolls a month, and each payroll is roughly $1.7 million. Our state cut, that $1 million, is the equivalent to 18 beginning teachers with their wages and benefits. We had $300,000 less in food service funding because we're not collecting lunch money, but at the same time, we are not collecting the federal and state subsidies that we would normally collect from those. Now, of course, we're not buying supplies for meals, but at the same time, we did continue to pay food service workers during the pandemic. We expect to see $110,000 less in revenue from casinos because those were closed. So we won't see as much in next year as we have in past years. Unemployment costs, those have yet to be determined. We are continually getting claims and processing those accordingly. No Findlay City Schools employees were laid off and they weren't furloughed, but we do still have claims coming through because the way unemployment works is anyone who received wages from us, whether they were former employees that moved on to another job or they are coaches, we have to process those. And if they earned wages from us within the last 12 to 18 months, we may be subject to paying some of those claims costs. I have it listed as bad, but it could be interpreted as good as well. We have $445,000 that we will be spending to get Chromebooks in the hands of our youngest Findlay City School students, kindergarten through third grade, and that is being paid with Permanent Improvement Fund, and those should roll out at some point next school year. We also have additional professional development costs as we try to make our staff better prepared for delivering the different education options that will come in this COVID environment. And then we have the obvious costs of cleaning and supply costs, shields, hand sanitizer, disinfecting wipes, as we want to keep our students and staff as safe as possible. The ugly. Well, the big ugly is how much more will state funding be cut for this coming 2020-21 school year. And in fairness to the state of Ohio, they cannot distribute what it cannot collect. So they have to see where their income and sales tax receipts are coming in at. And we don't know because they probably don't know for certain at this point. And as evident with the May-June cut that happened, even once we know what our state funding is scheduled to be, it's not guaranteed. Costs and logistics to provide much more flexibility to students, staff, and parents as we provide our different education options. So that's being worked out over the summer. And also the costs and logistics associated with social distancing. What does that look like on a bus, in a classroom, the cafeteria, the playground, our sports stands, our performance halls, and what do we need to put in place to make everything safe and follow the recommendation and guidelines coming from the governor and our health professionals. And then another uncertainty or ugly is what will our local property tax collections look like and delinquency rates for 2021. So that's one thing that remains to be seen. So that's the good, the bad, the ugly, and that concludes our financial update. And I thank you for watching, and I thank you for listening. I know school finances are not the simplest and certainly not the most exciting topic when it comes to your local schools. But again, I thank you for listening to this presentation, and I will turn it over to Mr. Roth and Mrs. Miller as they move forward. And also, if you have any questions, hopefully this answered some of those questions, but if it didn't, or if it just presented additional questions, please feel free to bring those to our attention, and we will respond to them as soon as we can. And again, thank you.